First, I just want to get your general take on just tariffs being used as in trade policy. The president seems to be using them as a negotiating tool. How effective, in your experience, is using tariffs?
Well, I think that part of what's happening is that the first 60 days, the tariff policy was aggressive. And I think we saw some very turbulent response from the markets. So clearly, the president wants to put in tariffs. I don't think he wants the same kind of reaction. He wants to avoid that. So the reciprocal tariffs will be very targeted, country by country, and it'll be on big items. For example, autos. U.S. has 2.5% tariffs, so he will want to have tariffs that are moving a lot toward the 2.5%. It's interesting, the comment he made, he gave himself some room to move, where he said, I may be more lenient than reciprocal. And I think that's smart, because reciprocal may be so dramatic that it's just not worth it. So I would expect these to be negotiations focused on market access for U.S. exports. And that is a way of negotiating this, preventing that this continues to go on, that this becomes more enduring, and move on to something else. So I'm hoping that this will not be the shock that it was in the first 60 days in terms of the tariffs he put on.
I think most investors are holding on to the same hopes, Mr. Secretary. At the same time, you say that the president's rejection of quote-unquote globalism is basically breaking the rules. I think a fair question for you is, are the current rules that are in place, are they actually benefiting the U.S.? Does the president have a point that the rules are unfairly biased against the U.S.?
Well, the whole idea with globalism, this is an ideology, and it is against the notion of global governance and in favor of national governance. So a lot of these institutions are seen as working against U.S. interest, not working for everyone. Some break the rules, others don't. So if that is the case, that we are moving toward a world where global institutions are either gone or have a lot less clout, then we need to be thinking about what replaces that. We can't have a world without any rules, because then it's a bit chaotic. So that's why I think the China-U.S. agreement, a China-U.S. agreement, a grand bargain, is so important, because that begins to lay rules on a bilateral basis. And what bilateral agreement could be more important than China-U.S.? So I would expect to see that. I am looking forward to hearing about a meeting between the two presidents, President Xi, President Trump. And this could be a very powerful grand bargain. And so I'm remaining optimistic. I think people should remain optimistic. There is, the president is willing to look at foreign affairs.
Well, Secretary, very quickly, before we get into foreign policy, I want to focus on one point you're making right now, which is doing business with China as the U.S., but also for companies. I know you're there for a conference about doing business in China right now. What grand bargain do you think that the Trump administration should seek? I know you're not in the room any longer, but if you were in those shoes or in those seats, what is the grand bargain that you would seek? Because in all fairness, China does dump its products in the world economy. When it comes to things like solar panels or EVs, they certainly don't play fair.
Well, that's one aspect, is dumping or countervailing duties or subsidies, technology transfers. The other thing, if this goes beyond what the typical items are in a trade agreement, potentially it could be Chinese investment in the U.S. So we want to bring back manufacturing to the U.S. That could potentially include Chinese manufacturing in the U.S. If it is a broad agreement, if it has positive intent, if the two sides believe that this could be different, that we can set a new set of ground rules, then we could see things that we never imagined that would really move the relationship forward. So I wouldn't just limit it to, dumping or subsidies or market access for financial services. Those will be on the table. But I'm hoping that there'll be bigger items on the table that move the relationship forward beyond where it's been.
Moody's put out a warning about U.S. finances due to tariffs. They said one of the things that could be impacted is business investment. I think you still have your finger on the pulse of what's going on in the global business community. Are these tariffs, are they dampening foreign direct investment in the U.S. by other countries? Are they dampening the willingness of U.S. companies to invest here in the U.S.? What are you hearing?
Well, it's creating uncertainty, and uncertainty is never good for investment. That's why the president is approaching these reciprocal tariffs with a bit more practicality. I think he wants to get as much as he can from his tariff policy without doing a lot of damage, and then move on to bigger items. So, yes, there's no question that investors are waiting. They're waiting to see where this plays out. Again, I believe that the back half of the year will be less turbulent than the first half, and these reciprocal tariffs is a good start.